Welcome to How to Retire on Time, a show that answers your questions about all things retirement, including income, taxes, Social Security, healthcare, and more. This show is an extension of the book, How to Retire on Time, which you can grab today on Amazon or go to www.howtoretireontime.com. My name is Mike Decker. I'm the author of the book, How to Retire on Time, but I'm also a licensed financial advisor, a licensed insurance agent, and a tax professional. In other words, I could actually do your taxes. When it comes to financial topics on the show, pretty much talk about anything, and that's really important. We want to be able to talk about anything. Now, that said, please remember this is just a show. Everything you hear should be considered informational, as in not financial advice. I don't know you, you don't know me. If you want personal financial advice, then request your wealth analysis from my team today, my team of fiduciaries. You can do that by going to www.yourwealthanalysis.com. With me in the studio today is my esteemed colleague, Mr. David Franson. David, thanks for being here today.
Good morning.
David's job, his mission is to be the voice of the people. He's going to be reading off your questions, and I'm going to do my best to answer them. You can send your questions in at any time by either texting them to 913-363-1234. That's 913-363-1234, or email them to heymike@howtoretireontime.com. Let's begin.
Hey, Mike, what do you think about value funds?
Ooh, yes, value funds. Okay, this is a fun topic because it's one that's often not correctly categorized. So by definition, a value fund is like a mutual fund, for example, or a fund manager. And this could be a financial professional that's just managing your portfolio, seeking to find any stock or any position that is undervalued so that you can buy it at a discount because there was something, if people just didn't realize its value. You buy it early, and then when people discover its value, then the position would increase in value, right?
Yeah, that makes sense.
That's really it.
Yeah.
Back in the day, in the 60s or 70s, communication was very slow.
Yeah.
So you may hear about in a magazine, or probably not a magazine, but like you may hear rumblings in your local area about this new startup. It's going gangbusters. It's very profitable. It's got great fundamentals, but the nation didn't really know about it. It was just kind of this region that knew about it. You could probably buy it at a good value, hold on to it, and then as it became more popular, it would then exponentially increase in value.
Probably just more like word of mouth.
Yeah, so I grew up in Seattle. I remember hearing about Amazon, this company that bought books. I'm thinking, what in the world?
Yeah.
I mean, we all thought that. We all like to think, oh yeah, I knew what Jeff Bezos was doing. No, he got so much crap for being an online book sales company at the beginning, right? But those who saw the value bought in early, and that's fine. Well, today, how easy is it to research anything?
Oh,
I mean, if you wanted to research some obscure species of penguins off of I don't know, are they on the Galapagos Islands? Whatever it
Yeah.
is, think of the most obscure topic.
yeah.
You can get information on that in seconds. Money goes where money can grow. Let me say that again. Money goes where money can grow. And the amount of research that is done of looking for anything of value, anything that could be value, is happening in milliseconds today. So the idea that a value fund can actually do what it used to do back in the day before the internet was very powerful, I think is a tall order. I have found that value funds, and this is my opinion, that value funds have become more speculative than actually following traditional value theology. Now, that's my opinion, but I have found that value funds are more volatile, so they're more of a roller coaster than you might expect when you compare it to its actual growth performance. And that includes the dividends. Now, that's just my opinion, but things have gotten a little bit simpler. Companies don't want to pay as much of a dividend as they used to. How we invest has significantly evolved, especially when you consider the 70s, the 80s, and then what's been going on today. And it's become more of a just growth. Companies just want to grow. It's become simple. Grow, grow, grow.
Yeah.
So the idea of value investing. I'm a value investor. That there's an identity attachment often associated with value investments, the same as with dividend investors as well. I have yet to see, and I would love to be proven wrong, value funds, dividend funds over a 10-year period of time to really benefit a client more than a properly constructed growth-focused portfolio blending between growth with liquidity, so there's some risk associated with it, and then growth with protection. I have yet to see a compelling case against that could hold water. I think that's my answer. What do you think, David?
Yeah,
Did I cover it?
Yeah, I think it does. So like we've talked about it previously. We talked about technology sort of interrupting. And this is another example, I guess, where technology has made communication so quick that value.
It's just harder to find.
Yeah.
It's harder to find. If you've got questions about your portfolio, if you've got questions about how you're investing, are you inefficient with a modern market? Are you missing out on potential gains because you're sticking to traditional ways and not how things have actually evolved over time? Let us know. We're happy to review that with you. We'll show you what a plan could look like, what the efficiencies could look like, and then we'll talk about portfolio options with you. Just go to www.yourwealthanalysis.com to request your wealth analysis. Pretty simple, pretty straightforward. Request your wealth analysis by going to www.yourwealthanalysis.com, or you can text the keyword analysis to 913-363-1234. That's keyword analysis to 913-363-1234. When you text the keyword, you're going to get a link, or you just go to the website. You fill out 10 questions. It's pretty high level. We don't ask anything intrusive. And then you'll schedule a 30-minute call with me. On that call, I want to understand what you want. I want to understand the relationship you want. I want to understand the objectives. And then we'll run the analysis for you, with you, walk you through it, show you solutions, and then decide how to proceed, whether you want to do it yourself, whether you want to do it with us or someone else. I mean, it's really all up to you. But yeah, go to www.yourwealthanalysis.com to really discover what you don't know that could be holding you back. At the end of the day, what's the purpose of your money invested? It's to grow. It's to give you more resources in the future. If you have more resources in the future, then you have more freedoms, you have more flexibility, you've got more capital to make decisions. And that's the idea. So go to www.yourwealthanalysis.com or text keyword right now, analysis, to 913-363-1234. That's all the time we've got for the show today. If you enjoyed the show, consider subscribing to it wherever you get your podcasts. Just search for How to Retire on Time. Discover if your portfolio is built to weather flat market cycles, or if you're missing tax minimization opportunities that you may not even know exist. Explore strategies that may be able to help you lower your overall risk while potentially increasing your overall growth and lifestyle flexibility. This is not your ordinary financial analysis. Learn more about Your Wealth Analysis and what it could do for you, regardless of your age, asset, or target retirement date. Go to www.yourwealthanalysis.com today to learn more and get started.